There we go. Okay, so good evening, guys. Ken at Tortoise Capital. This is small group coaching 2024, cohort number 1, session 1. It is January 8th, 2024. Things are cold and miserable here in Kansas. It's 31 degrees and wet and snowy, so it is absolutely shitty miserable. Except they closed down the post, so it was work from home. So, and I didn't have to help take down the Christmas lights because it was too wet out. So, action deferred is always a good thing for me. So everything's good here. Looking forward to the work we're about to do. I noticed I had the 20 mule team in the background, not intentionally, but altogether fitting and proper. I mean, there's a reason why the Army chose the mule as its totem animal. It just wants to work, and it wants to work in a certain way. That's what I'll say. It's born to pull, and it wants to pull heavy loads, and over mountains, across deserts, and across the continent. So that's kind of we have that to look forward to this year ahead. So let me kick it over to George. If you'd do a quick check-in, and glad you could make it.
Sure. So I'm George. I've been trading full-time for 2 years, essentially. And I've been trading sort of part-time for many years before that. And 19 weeks ago, I started with your systems. And I've been exclusively trading them. And posting my trades and consuming all the information. And where I am is actually kind of funny. I had my worst week ever last week. So that was kind of weighing on me. And I wouldn't have mentioned it, but you said we're going to check in and talk about it.
We are where we are. If that was the worst it's ever going to be, then it's not bad. It was, I think last week was a hard one because of the holidays and weird volume and little follow through. And it was a tough week. But generally speaking, I'm seeing progress every week. So you're responding to my less than gentle touch in the chat room. So I think you're doing
and then I guess just to sort of talk about myself, because I think it's kind of important to trading and learning, which is kind of the same thing in this context or in this environment. So I really like to basically copy, like I'm a copycat. So I like to see someone doing something and do the exact same thing, which I guess is good for this this case. And I'm also like a lot of like interaction, like back and forth, or at least daily back and forth, because I'm not really good at doing stuff by myself. I guess also another thing is I'm very passionate about trading. I've been trying to learning to trade for many years, and I think I've finally gotten to the environment where I can actually succeed. So that's kind of major progress, and it's pretty exciting. That's about it.
Okay, awesome. Welcome aboard.
Thank you.
Jonathan, you're next on my screen.
Okay. I'm Jonathan Levine. I'm originally from Birmingham, Alabama. I live in San Juan, Puerto Rico now. So it's 80 degrees and sunny here pretty much every day. Ken, I hope I don't break your heart with that, but I'm a former surgeon and had cancer a few years back, and I'm in remission now, doing fine, but I was really sick for a long time and wasn't able to return to my practice. And I'm trading now as looking at it as a second career. Been trading for about 2.5 years or so, and the systems I were trading, there's some aspects of it that I just really finally realized don't fit me. They play into some of my personality traits that I think could be a strength for me, but these kind of made them more of a weakness. And started with Ken's program. I guess it's been 7 weeks, 8 weeks, something like that. Doing the Kata Challenge, and it's really been an interesting experience taking the market knowledge that I have and superimposing what I'm learning from Ken on top of that, which has been much more clear than what I've been doing. So I've kind of been gratified with how I've been doing with that, and kind of able to see what aspects of my trading were the techniques I was using and which of it is me, and making that clear. So I think that has been very helpful already. So so I'm trading most every day, and definitely have some aspects that I can pinpoint that I think I just need to tweak a little bit to get me where I need to be. But kind of excited about this and working in this environment, collaborating with everybody.
With Stubbian. Jeff, how about you?
Hey, good evening, guys. Jeff Burnson, 58. I've been married 33 years, father of 4. Live in Central Texas, just north of Waco, and I own a small software development company. After about 17 years, found out we may be losing our contract here at the end of the year. So also looking at a second career, depends on how fast that phases out. And the main reason I took this class is just to try to accelerate my learning and in a collaborative way. I've dabbled in trading in the past, never done it really full time, never even really much other than in 2012. And like Jonathan, I was also diagnosed with cancer then. I've been fighting it now for, well, since 2012. So what's that, 11 years? Had 5 surgeries, just started chemo last month again. So decided I was supposed to be dead by now, and I decided it's time to stop putting off. It's like, well, if I'm still going to be here, it's still going to lose this contract, then maybe I need to learn how to do a second career. I did the Kata Challenge, finished it in September, was pleased with that. I had, an SQN of over 3 or right at 3, and I don't remember 58R or something like that in hand. And a lot of that was paper trading though, and then live trading, but not real trading. Started live trading micro Forex lots in December and have lost 10R after about 35 or 40 trades. So, I've read that that's pretty common.
Yeah, I would. Anything else would be suspicious.
Yeah, I
and
noticed
actually dangerous.
I've heard that too. So, the good news is I definitely didn't get a big head as soon as I started trading, even a small amount. It was like, wait a minute, this isn't working like I thought it was. So,
hey, let me ask, were you using the same things in the paper trade, the same targets in the paper trading as in the live trading, the mini Forex?
Well, not completely. I was using primarily pound dollar in the Kata Challenge, and then I did the pound dollar and a few other U.S. denominated Forex is what I was really paper trading. I know I wasn't, because I was only trading in the mornings before work. I had only like a 2.5 hour window. I think I was I know I was over trading. Wasn't waiting for, I was doing a lot of Kata 2 entries. Wasn't waiting for SSCs to set them up like I had been when I was able to go back and kind of look at a larger time frame. So I kind of know what I was doing, but my gut check says that maybe the 3-minute bar volatility on the pound changed a little bit too. I went back and looked at some in September and before, and it just seems like there was less wicks running through the PSARs, and that was really chopping me out a lot. So ultimately I'm responsible for it, but this kind of led me to where I'm at now. I'm curious if I created an automated system and back tested it with SSCs, if that would actually, look at the average R or the NSQN or something like that on a basket of stocks, kind of like you do with your blended monthly rebalancing, but using the actual recent historical data on different symbols and timeframes. If that would help kind of narrow down and say, okay, yeah, this is actually phasing into where 3-minute bars are working well. I don't know.
I
That's
think
kind of
there's
where I'm-
something in there. I can't say for sure that, the 3 minute is the magic
Sure.
sauce on that, but there is absolutely uh stationarity in volatility. Like
Mhm.
there's, volatility is at a certain level and it's going up or down, but there's also a seasonality to that, a longer term um regime of things like in swing trading, uh after after the internet bubble blew up and then things came out of the crater around 2003. From about 2003 to 2008 was a really good time for swing trading and a horrible time for blended monthly rebalancing, because it turned out that moves of 2 to 10 days that were lasting 5 or 6% on a swing was really well done. So swing trades were doing excellent, but the blended monthly rebalancing was getting absolutely murdered because the 2 weeks of outperformance from the swing trade would push a bunch of things to the top of the list just in time for there to be enough momentum to get you into it just in time for it to rotate to another sector and get bludgeoned as people were bailing out quickly, and so it was just like, every rule set has kryptonite, and the and that period, that time frame of optimized swing trading and underperforming monthly rebalancing lasted about 4 to 5 years.
Wow.
And then the next thing that happened was 2008 long-term capital management exploded, and we got a huge, 30 or 40% sell-off so you get, so the psychology of that lasts for a couple of years. In the same way, COVID, almost the same kind of pattern where in a matter of about 6 weeks, the market loses 40%, spends 18 months climbing out of that hole, which if you had just started, it would like, oh, look at this beautiful 75%, 100% move in the market. And long-term momentum trading is wonderful because whatever the leader was, it stayed and it was the S&P. The S&P led the way out of that hole, which is really rare behavior for the S&P. That if you took a look at 100 years of the S&P 500, it's almost never the strongest regional sector that year. But over the long run, over decades, it's really a solid, but it's never in first place. The things that were in first place then go to seventh place, and what was in seventh place goes to first place. So you get this periodicity of targets in a time frame, and then you also get stationarity in styles. Swing trade good, long-term buy and hold bad. Annual asset allocation good, swing trade bad, or whatever it may be. So I'm not a Forex expert by any means. I am purely a tactical pattern player on Forex. But it seems to me also that Forex, even more than the equities, has an opportunity for trends that could last quarters and years because of a change in political regime and like if it was the US, a 2-year and a 4-year strategic choices that are made in policy when you get a new administration or a new party is in charge of Congress that passes laws in a certain way with respect to the economy, and they are consistent for 2 years. That whole idea unfolds, being supported by a Fed that's trying to accommodate probably the party that's in power. So, could that influence tactical trading volatility? I think it can. When you get sea changes, the size of the waves are gonna change. And so there's always like a couple layers of things going on in the world. In fact, in the world of forecasting, where I spend a lot of time, um, uh, there's a lot of horsepower and money behind the notion that the market is not quite a random number generator. That in spite of what Taleb and Burton Malkiel say, is that in fact financial markets, although often look to be random, there's some hidden deep order that's in there moving things around. And so when you're a marketer and a forecaster and you're trying to predict what future demand is going to be, and you're working with products that are robust, and you're working with human nature, which is robust, and they're spending discretionary money on things that are in fashion and out of fashion, there are certain waves of change that go all the way through there. And so when you're a forecaster and you start unpacking the causes or contributors to variation, what you're trying to do is you're trying to tease out the 3 or 4 formulas that are each on their own little sine wave and that are blending to give you this overall demand curve. And so there is things like steady state demand. Okay, people are going to drink a certain amount of water. They're just going to do that or they're going to die. So there's a steady state demand. And then there's something like a seasonal demand in which I'm going to drink more water in the summer and in the spring when I'm watering the plants and not so much on the other one. So there's a certain seasonality curve that sits on top of that steady state. And then there are some calendar events that say, I'm getting paid on the 1st and the 15th of the month, just like most of the rest of the world. And for the 2 or 3 days after the 1st and the 15th, I spend more on beer than I do on water. And so there's a certain periodic demand cycle that's geared towards a 2-week cycle of heavy demand. And then there's some that are calendar events like July 4th, no matter what day of the, there's always a surge in this and not a surge in that. So when you're in the forecasting business, you're always trying to tease out the components that aggregate into the demand. And so I take the same mental approach when I'm looking at the systems that I have available to trade the markets, is that I believe they go in and out of phase as a result of some hidden order that is favoring this rather than that, and that there are certain things that are driving the market, and then there are guys that are reacting to those drivers, so you're getting second and third order effects. So I look at all of that as not random, but at least complex and chaotic enough that I can't get definitive on it, which is why I'm always really, really cautious about the limits of back testing, because I know how many ways there are to go wrong with that. Even when you're not being sloppy, it may be that, hey, there is a 57-year cycle that's in there that's keyed to biology that nobody's just figured that shit out yet. And hey, it turns out that there's some biological phenomenon created by 3 billion people holding cell phones up to their head. And the energy coming from that is altering the way that we are processing information, and it's affecting our economic decision making. And that's never happened before. This time it's different. And then every time you say, yeah, well, this time it's different, then you remember all the times that it wasn't different. So I'm not surprised. I have sort of a Karl Popper approach to all of this stuff, which is that I assume that the plan is going to go wrong. I assume that there are variables we haven't accounted for. And even no matter how carefully we back test, there just could easily be a mixture of variables that's now happening that we've never seen before, that's not covered in the data that's already there. So that causes you to have, it causes me to have a particular view of risk and analysis and sampling and testing and trading forward. It's why I place a really strong premium on live trading forward to see how it, no matter how good it looks in the back testing, until I'm trading live money through a normal time cycle, it's just, the back testing just had to be enough to persuade me that I could afford to risk $1 on this idea. So it's, there's not much back testing anymore. It really is, can I make an argument of why this seems to be working? Seems to be working. Let me put some small amount of money on it, let that money earn money, and let that little system trade itself at a risk level that it has earned. I in order to keep my sanity, I try to, I resist the urge to come up with a unified theory of everything, of how the markets work and why things should work. And so I'm very much anecdotal in that sense, or inductive. I would also call it abduct, the way I look at stuff. And I say all this because this is going to unfold during the year as we take a look at what you're doing and what the evidence is I really do, I think, take an abductive approach, which respects deductive from a theory and deriving it to a hypothesis and then testing it with an experiment under control to see what we can learn. You know, the old null hypothesis and whatnot. But I'm also inductive in the sense that I respect the knowledge that we create through our actions in our hands and are encoded in our stories, because it has some authority in our memory and in the way we make decisions. So abductive kind of sits between those, which says, well, given what I've seen top down and bottoms up, it seems like maybe this could be true. So let me do a quick case study or an experiment to see if that limited local theory could still be true for a while. And so you add some knowledge that is grounded in data, grounded in some theory, but it really is of limited duration and provisional, and we're concerned about, degrees of confidence. And then that leads you to decisions about risk management, which says, what is the minimum level of risk that I have to take in order to achieve my objectives if this system is true, or if the system is going to continue, as opposed to saying, which is what most younger traders will do, is say, well, you had 30 trades and it seems like it's working, and therefore your edge is this. Let me now find the maximum amount of leverage that I could possibly put on this thing under ideal conditions and project that to a compounded annual rate of return so that in 7.5 years, I can own the universe. Okay, so I don't think like that. I think very much the other way. I'm very much a second mouse, which is, I do not like being the first mouse. I've been the first mouse. In combat, I walked point for our platoon because I was the best guy to do it, but that scared the living shit out of me. It should. But I was the best choice for that, and I knew it. So I took the risk that I had to take for the good of the team. But I don't like doing that. And I don't like being the first mouse, which says, well, this thing has lost 8% of value in the last 24 hours. That's unusual behavior, and therefore it should go up. Yeah, but it's going down. Yeah, but it should go up because it lost 8%, and every time it loses 8%, it's gone up. Yeah, but it's going down. So I don't like being the first mouse. I respect the first mouse. I study the first mouse. I'd like to see the first mouse do things that makes price start to reverse. And that's where, in my view, the SSC, which you guys have all heard me talk about at length, that really is a second mouse entry. Because the first mouse stopped the panic selling and made the RL10 reverse just enough to persuade me that there might be something here. I don't believe it, but I see it, and I'm ready to take a provisional risk on it. Then if it works, and I have a successful SSC and I exited, I'm now ready to be a third mouse or a 2.5 mouse on the Kata 2 all the way up the stack. And at some point, that will start to have some diminishing returns as this thing is now becoming comfortable on the long side, and the fourth mouse and the fifth mouse are coming in and are starting to just buy it with confidence. And now all of the volatility's out, but it's kind of a long grinding move. So as I start looking at how I feel when I'm trading about, how do I feel about what I think about the market? That's how I feel, is for me, the feeling of how much risk I have to take and how much risk I am taking really is driving a lot of the decisions I make about what kind of rules, what kind of systems, what kind of targets, how do I blend them? Do I take the overnight risk on a swing trade versus the intraday trade? Like, it was hard for me to start thinking about applying these various techniques to Forex pairs. You know, I'm trading Forex pair futures in a future because I was comfortable with futures, and they didn't offer Forex trading directly, but they offered Forex pairs futures, which trades just like the pair. And that felt like I could do it, and I could slowly ease into that to a certain degree and expand my horizons a little bit. So I say all that to say that I think it's important for you to know the direction your coach is coming from, and how I look at performance coaching and data and sampling and giving advice, and it's appropriate for session 1 for me to talk about that a little bit. And Juan Carlos and Satya, we're going to get to you on the check-in, honest to goodness, but I'm sort of on a roll right now, so you know how that goes. So what I would say is that the way I coach our young people in soccer influences the way I coach traders, in the sense I'm trying to have them develop a coach's eye, for them to see the game directly, to ask questions and to support them, and to make suggestions on small bite-sized nudges and drills, but really to let the ball be the best teacher in soccer. And in wrestling, you got to roll on the mat. That's the best teacher. And I am a fan and a supporter of Aristotle's style of coaching with the philosopher kings in Athens, which was called the protreptic, which said that when the philosopher king came in to be coached, Aristotle realized that, hey, there's nobody else that could persuade the philosopher king to listen, because everybody that was giving him advice, the philosopher king was saying, yeah, you're just trying to curry favor, and I can't trust what it is that you're saying. I can only go to a guy that doesn't give a shit, or who's going to coach me in a certain way that's not trying to tell me how to be the king. But the protreptic coach in ancient Athens was a guy that would literally accept whatever the philosopher king would put on the table that he wanted to talk about in the public space, and say, I think you're coming from a place of truth and you really want to explore this, and so I'm going to hold up this light and start asking you questions about the thing you put on the table to see what you think about it. I'm just going to try to ask good, surprising questions from different angles so that you get a chance to look at that thing that is of concern to you through a different set of eyes, and then you can explore your own mind, what it is you think about it, where you might go with it. But I'm trusting you to be the expert in your own knowledge, in your own life, and in your own values and in your own judgment. So the coaching approach that I'll be taking in this is sort of a blend of those things, that I have experience, I have questions to ask, I've seen a few things, and I'm happy to give technical coaching on things where you're in my wheelhouse where I have proficiency. So if you want to talk about the SSC versus the Kata 2, I'm competent to speak on that on a technical basis. But if you were using, I don't know, like Fibonacci numbers, I'm not going to give you technical advice on that because I haven't made a study of it. So I'm going to always try to stay within my area of competence when it comes to offering specific advice in that sense. But otherwise, I'm going to be adopting the approach of the game is the best teacher. You are the best judge of your own data and insights and conclusions and decisions because you got to live with it anyway. And that's what we want is self-actualized traders who have developed a coach's eye. So we're going to see some of that. The other thing that I can offer is that, I've spent, 20 plus years in the world of quantitative, qualitative, and mixed methods research, taking a look at how to find data reliably and then draw conclusions about it to answer questions about policy and processes and things like that. So so I know enough about that on how to do research and what constitutes evidence versus anecdote. So I'll be inevitably talking about some of that stuff. So that's by way of my check-in. That's where I'm coming from, and the approach that I hope to take as your coach in this one. So Juan Carlos, let's get your check-in before I take all the oxygen out of the room.
All right. So that's awesome. I started trading around 2001. 2001 on the crisis, coming out of that crisis, and very like on and off, whatever stocks were moving, and I would do that. I was working as a software engineer in New York, working for several of the financial companies, never on the trading side, but always looking to the trading and how does this work. I worked for a couple of the hedge funds, and it just caught my attention. And for some reason, I ended up with visiting Van Tharp, and he got me into the spirituality trend. And I went that rabbit hole, and I'm still there. And with that, I left a little bit the trading arena. After the years, I came back and I started trading the futures market. And again, I was back testing and doing all this kind of stuff. And at the beginning was beautiful. Short after that, it was a disaster, and I quit trading again. Then started working on another company or whatever. And then after a while, I started doing automated trading on the IBD 50. And I found very good performance there on breakouts until they weren't. So again, I found disaster in that arena. I left again trading, and then like 2 years ago, I started again. I left my current employment. I was in a hedge fund administrator doing all the accounting on the back end. And I started developing different strategies. And that's when I found you and started following the different RLCO strategies on different time frames and start playing with that. And it has been very difficult for me to automate this. I don't want to be trading by myself and taking decisions in real time. I want to have a computer do the trading for me, completely automated, or even if it's halfway automated. But I found many drawbacks, like concentrating on just one stock and following all the time has not worked very well for me. I developed this using the frog concept with a little bit of the RLCO using the levels of the PSAR. And again, I did the back testing, worked really well for like from October, mid of November. And then after that, it's been a losing strategy after that. So I'm here to develop a system in which I can, from zero to being able to maybe trade something similar to your swing system, automated. And that's what I'm doing here. Hoping I
Yeah.
can develop this
Yeah.
using different strategies for maybe position sizing and risk management and choosing the right ones at the right time. Yeah, that's why
One of the things we'll notice after we talk with Satya is from about 1 October to middle or late November. Yeah, the RLCO and the breakouts were absolutely amazing. Part of that was that coincided with a historically amazing 40-day directional move in the market. And so trades of a certain style should be amazing in there. And then from about 1 December onward, as things have been coming into the station, the moves are less and less and of shorter duration. And leadership is rotating, and there's no clear leaders emerging, but volatility is increasing. So you're getting more spikes, less follow through, more chaos. And so it's not a surprise that things that really did well in an orderly directional era from 1 October to, late November, that's exactly the things that are not doing well now on that time frame. So the eternal search here is find the mover. Well, that's the easiest thing there is to say. Find the mover. Yeah, okay. Got it. And then check to see how strong it really is. How long is this going to continue to be? Okay, well, that's all. Just answer that question. Find the thing that's going to be the best mover for the next 2 weeks. Okay. You never said it so simply before. Okay. So yeah, so there's some of that.
Mhm.
And that's why I resonate with your idea about doing routine things routinely with a system so that you are free to scan the pathways ahead for signals that the regime is about to change, or the first signs that what is work, the turning of the seasons, if I can say it that way, and then having things ready to see what are the new leaders going to be, what is the new strategy seeming to look like, what's going to be Trump in the next hand, if I was playing cards. Yeah. So we'll talk about ideas for scanning and market classification and using the results of diversified systems as information and not just for production. We'll be hearing some of that stuff. Like, I'm a firm believer in, if you ever had a system that worked for a while, that you should always keep that thing running, even if it's just paper trading, so that you can look at its rolling equity curve to see if it's coming back into season. Like, there's about once every 18 years, I think the last time I looked at this seriously, about once every 18 years, the S&P utility sector, XLU, can be swing traded about once every 18 years. And then other times there's just not enough there. You can't get it done. But there's some times when it's the king. It's been a long time since that's the king, because it was always the king when big money only had utilities to be able to earn some income. Like, there's nothing else that was paying a dividend reliably enough. And so the only place you could go is utilities. Well, there's other products out there now that you don't just have to have utilities. So utilities is becoming less and less useful as a source of safe cash. And so, and as power generation gets crazier and crazier, now suddenly guys that have invested in long-term coal burning or fusion reactors, now suddenly it's hard to justify that as an income source. Anyway, yeah, so we'll get into seasonality and sensing and then setting up a meta system. And but then also trying to automate as much as we can so that we can trust the robot when it's time to trust the robot.
Yes.
Which in a nutshell, trying to get the right parameters on the PSAR is exactly my approach to trying to answer that question. If I can tune the PSAR to an acceptable trade-off level, then I can offload an awful lot of decision-making to that. And I think you're going to be happy to see what Phil and Griff are doing with Edge Raider now. We just got a partnership with Chris White and Edge Raider, and Phil and Griff are becoming expert in back testing so that we can start checking some of the historical numbers on parameters. Like you're going to really like the robotic approach to PSAR flips on 3-day and 9-day bars. It's pretty cool. And so there's just enough goodness in that back testing to point us in that direction for an important part of our portfolio. Not the single solution, but it's certainly it's going to be part of a healthy diet, you know. Satya, why don't you give us a quick check-in, see what's going on?
Yeah. Hello, everyone. This is Satya Agrawal. I'm from Toronto, married, father of 2 boys, 16 and 11. And I have been following Dr. Ken Long since 2021, registered in a couple of courses like Creativity 202, Applied Systems. And this is my 2nd year trading full time. And I have been strictly following Dr. Ken Long's system. And I love SSC. SSC is my favorite pattern because if it is fails, then it goes to CD, and if it is succeed, then it goes to Kata tools. And looking forward to some good system from this course. I hope.
Yeah, let me share my screen real quick. I just want to. I see I've already consumed an hour of our time typically. This will count as a 0 session, so it's not this. You're not paying for this yet. Let's see, share screen. Yeah, so I've been adding things to the course on Rizuku on the OWL group. Let me know when you can see that.
I can see it.
Okay. Awesome. Get my notation. All right, so a couple things. So this is in on your OWL group when you call up whatever courses you're in, you should be able to see that one. Has anybody not been able to find that course? I've sent a couple emails from it. The automatic messaging seems to be working okay. The only thing I can't do is attach a text file to it. Piss me off.
Email that I got today took me to Basecamp. It's the OWL Basecamp, but there wasn't anything in it. So I'm not seeing.
Yeah, so this is
That's
not in
something.
Basecamp. This is in. You'll see this in courses.
Okay.
OWL group.
I've got the small group up, but I'm not seeing.
.us.
My
And
Rizuku doesn't
who
look
is
like
it?
this.
Who's it? Is that Jonathan?
Yeah, yes, I'm sorry.
Okay, all right, yeah, I couldn't see I had the screen minimized over there. So this is not in Basecamp at all. This is not in Basecamp. This is in
Okay.
courses.owlgroup.us. And the
Okay.
platform is called Rizuku. And so I actually can, if I remember how to do this, I can mimic you and I can see what you should be seeing.
I only
When I
have,
click on the little, I've got that, and I click on the small group coaching.
Right,
but
this one here, you should see this. It should be
Yes.
a wheelbarrow, and then when you click on that,
Back.
Click on getting started.
yeah, you
on
should see, this
introduction.
is what the student view looks like.
Yes, okay, okay,
And then if you go to, here's the 3 modules, right? Module 1 has 2 lessons. Module 2 is titled Cohort 1 Weekly Session Recording. So when I go to that, click that lesson, what I'm going to do is each week, like today's lesson, I'm going to upload that video on YouTube in a private space and put that link, and then this link will lead to that video.
okay,
And then I will also at the bottom make that video downloadable. So you could actually, if you wanted to, you could download that thing. So you're not, you can get it from a local storage as well. And then next week it'll be here. So I'll just keep building out each of the weekly recordings and putting that in the module that says cohort 1 weekly coaching sessions.
okay, great.
So now on this one, on the introduction, there's 2 lessons. It's the introduction and then getting started. So introduction just simply is a discussion and hits the timing and all that stuff. And then the getting started lesson, this is what I actually wanted to talk about. I'm going to come back to that. The third module is presentations from senior traders or sample projects. And I'm going to recommend to you that in the next week or so, or over the next couple weeks, that you review all of these things. Now, some of them you may have already seen from the Research 2023 or 2021 workshops, but this is guys that are sitting in your spot now that have gone through a year-long process. So Jim Carroll's, first of all, you should just study anything Jim Carroll ever produces. His discussion about volatility in the market and how he's trading it. He's a pro money manager for 30 years and smart guy. The problem he had when we first started working together was that he had a system that if you look at volatility, it will spike up, and then after it has these extraordinary spikes, will have a long, steady decay. So you can sell volatility and get a cash premium in here. So he would do that. And what he was doing was he had a system that when this breakout from a normal condition occurred, let's call that a Z3 breakout. And so volatility would go through these little regimes, and he could make money selling volatility in there, but that system wouldn't work from the time it broke out here. So that got him out. And then when it crossed some line, like a 10 period moving average, he could sell volatility and collect cash all the way down. But what he wasn't getting was this move. And he had a signal that would tell him when this was happening. And then when this rolled over and crossed some other filter, he knew when it was time to do this, but he didn't have anything to do in here. Now, the combination of this system and that system was getting him something like 60% a year. But his problem was he was not getting this 2-week period of time in which he felt like he should get. So we've been working on that. So what he's got in this particular project is an update to this 3-part system and what he's doing with it to continue to improve it. Bill Scheit is talking about how he's applied some of our foundational principles to his long-term trading, and that's informing his PRX system for crypto swinging, but also how he's doing a modified blended monthly rebalancing. So this is a swing system that's using a basket of crypto and applying PSAR flips to do swing trading, but only when they are in bullish mode. So that's actually an interesting way to get diversification with a bunch of volatile instruments, but which are doing pretty good, and then using the PSAR as a, well, that's a pretty good system. And then his version of the BMR is using my ETF rebalancing system, but with some tweaks that incorporate some elements of, and he's been doing that for his kid and his wife's retirement. And he's been doing this to generate reliable cash. So that's worth listening to. Boccaccio, his little indicator on the Williams percent R is really freaking cool. And Sonal is his life partner, who's a great trader. And she's been doing hypnotherapy certification in the UK for the last year. And now she's a certified hypnotherapist. And she's talking about how she does that now. And Luke is talking about how he has done a systematic multi-year approach to the 5-minute Aussie, in which he is examining how to create simple rule-based systems that can be auto-traded in the Forex and on the DAX. So he's doing index futures and currency pairs, robo trading, with the idea that he has some reliable patterns on the SSC and whatnot that allow him, when he treats the whole day as a single trade, so he might have 10 trades in there, and when he takes the aggregate, the set of rules that he's using makes the average daily trade and the average week something like a 80% positive days and 85% positive weeks by aggregating the results of these systems. And how he's managing that system as an all-weather robotic brick-making machine should really appeal to you, Juan, and to others. Now, this session that I did, okay, so they all did these presentations in Research 2023, and each one is about an hour long. And then this one, I talk specifically about Bill, Jeff, Luke, and why the intersection of their three ideas is a multi-million-dollar idea. You're going to want to listen to that one because it's going to give you a lot of really good ideas that are centered on futures, Forex, robotic trading, some psychology, some backtesting, but you really want to listen to that because at the end of a year, whatever you come up with, I anticipate is going to be as amazing as their presentations. And so should you. You should expect that the work that you're going to be doing with these little weekly check-ins is going to lead you to the kind of synthesis and summary that produced what they're doing, because you're doing the same thing they're doing. Tom Hardison's work on how to learn is a very nice psychology of self-care and accountability, so that when the going gets tough, I listen to Tom talking about how to take good care of yourself. And then this interview here between Joe Greco, who's a real estate investor, and Tom were accountability partners. And this was Ernie interviewing them about their accountability partnership and the way they set up their little partnering and accountability stuff, even though they were looking at really different systems, turned out to be a really, really good accountability thing. And it was really kind of the inspiration to me for what we're going to do. So if we come in here each week, the 6 of us, and we put these things on the table to talk about, it may very well be the case that 2 of you end up working together in the way Joe and Tom were working, or 3 of you, or 4 of you, or all of you during the week, or whatever it may be. There's room for that to happen. And the way they describe the use of accountability partnering as you're on this weekly journey is going to be really refreshing and helpful for you. So I really want you to, I've taken the videos from the Research 2023 and incorporated that into this course because I think there's a lot of good material in there. And you can see me coaching them on some pretty technical things. So I would recommend that you things that I think you should do is review their stuff. This little video here, you may have seen it before. That's me talking about storytelling and the science of story thinking, and why it's my contention that getting a true story circle with 6 of us reporting on the things that we're working on and trying to tell the truth as best we can is a really powerful way for us to develop as a collaborative group. My discussion on VUCA and SWOT is going to explain why I think you should do a SWOT analysis, which stands for strengths, weaknesses, opportunities, and threats. Why you should do that in order to come up with what I call the modified SWOT, which is 5 different sources of strategies to achieve success based on your internal strengths and weaknesses, and then what you perceive in the environment as opportunities and strengths. There's ways that you mix those to develop strategies for success. I think I attached, or I'm gonna upload or attach a PowerPoint template that shows you how to do it. It shows you how I did it with the soccer academy and our soccer club, so you can see how you go through those mechanics. What that will do is help you describe where you are in a very chaotic kind of a world. So VUCA stands for volatility, uncertainty, complexity, and ambiguity. It's developed by the Army and used by all modern strategists. And each one of those helps to explain why things go wrong and why things turn out differently than you planned. Each one of them is different, but they all contribute to problems. And what we're trying to come up with is systems that can give us good results in a world that features those 4 qualities. And so to come up with systems, we need to use all of our strengths and to minimize our weaknesses or protect against them. And we need to seize opportunities, and we need to deal with threats. So when we have a strength and we compare it to the list of opportunities that are out there, category 1 turns out to be strategies that allow us to put our strength on an opportunity. That's where the great big win comes from. Well, the enemy's threat, when it hits our weakness, this is where the great big losses occur. So strategy 2, the category 2, is going to be things that we can do to make sure that we don't have catastrophic failures. And that's going to be different things than are these wins. And then there's going to be things that low cost, low risk, easy to do things in category 3 that allow me to seize an opportunity to eliminate a weakness. I need to do just enough to make the weakness go away. I don't got to be great. I just got to. So that's a different cat. And then category 4 is sometimes I have to use my strength to just defeat an enemy's strength. I don't like doing that because that's usually not a big win because it's bloody. I really want to keep my strength on the easy opportunities to get catastrophic wins. So when I get these 4 categories of strategies, category 5 turns out to be, how do I put together a plan that allows me to do the best of each of those areas in order to get a blended return on my strategic plan? So I've got a little video and a structured set of worksheets to help you start thinking about that. Because my belief is that over the next 52 weeks, you're going to end up visiting what you think are your strengths and weaknesses, and you're going to be making some decisions on how to structure systems to get leverage on that and to find opportunities and avoid threats with systems and rules. Those are everything that a system is. When you document a system, you're really just describing a recipe for how to exploit what you perceive to be the SWOT that's going on in a VUCA world. So I'm going to invite you in this first month to kind of spend some time on that. What I want you also to do is start defining for yourself your top level goals and what a project might look like and what your final definition of success at the end of 52 weeks looks like. What is that end state in mind? What are some things you can say, and how will I know that it's working? What is your criteria for success? And it may be that there's 4 chunks or 4 phases we got to go through to do that. I got to do this, and then I got to do that, and I got to build towards this, and then I got to do that in order to get to the final objective. So, we'll break things into pieces and parts and eat the elephant one bite at a time. So I'm going to invite you to think about what are the top level, and are there already some things that you think we're going to have to do just anyway? Like I'm going to tell you, you need to go listen to those guys. That's just mandatory. I just think you got to do that to see what right looks like. So, and then also see what you can cherry pick from their ideas. And then I think you need to do the modified SWOT analysis in the 5 categories. That's enough to get us started for the first week or two of laying out the groundwork and preparing your tools and preparing your workshop. So I would like you to take that on as tasks for the week ahead. Now, having said that, what I think our weekly agenda looks like, and this is all in pencil, but what I'd like you to be able to come in is sort of give us in 5 minutes, because you have about 10 minutes allocated to you. So if you come in with 5 minutes of prepared material, I'd like you to be able to say what you think either your capstone project is or the first big project you want to work on, and then what specific thing you did this week that you focused on, and then what kind of progress have you made since the last meeting, and then what are you intending to do next week after the meeting? What do you plan to do in the week ahead? How are you going to get it done for the week ahead? What resources you have and what resources you need, and then what your expectations and your level of commitment and how you're going to be accountable for the work that you propose to do. In a nutshell, that is performance coaching. So you leave that, when you leave the circle each week, you've made a commitment to saying, this is what I'm planning to do. That's my work for the week ahead, how I'm going to do it, the resources I have or need, and then what I think about it by expectations and how I'm going to be accountable. That's your week at a glance coming up. And then you actually have committed to that in that circle with us. And then you're going to live that week going forward. And then next week, you're going to come in and tell us, well, how'd you do? what were you we remember what you were focusing on. We remembered what you said you were going to do and how you were going to do it and what your expectations were. Tell us the story of what actually happened. And then as a result of that intention and your action, you come in with an updated report card on your own work. And then as you're listening to all of us kick that around, in the other 5 minutes, there will inevitably be things that we can talk about or possibilities for success. And then if you need to do a follow-up with me later, like, hey, I thought about it, here's what I'm going to do, then what I really want you to do is just, leave each session with a provisional plan, take 24 hours and refine it with a handwritten note to yourself or to me, whatever you need for accountability, or shared with your accountability partner from this group, or shared with an accountability partner from your life who may or may not be a trader. I mean, I trust you to figure that out. But decide after you leave this session to turn that intention into an accountable plan, and then follow through with it, and then tell us how that's going. And that's going to move you towards your final destination. And that, I think, is I want to try that as our structured approach. Now, just so you know, in anticipation of doing this work this year, starting in July, I signed up for, the International Coaching Federation coaching certification program. I went through, a couple hundred hours of coached effort on being a coach with this in mind. And so this turns out to be very consistent with what ICF says. It also is consistent with what we do in judo and soccer and with the Army, and that I've done for 20 years with traders, but it has a little bit of extra sauce on it that we're doing the right thing if we do this. Now, as an optional thing, if you're in the foundations course, there were 2 psychological exercises that I think are really helpful. One of them is drawing the house of trading, and another one is doing the wheelbarrow exercise, that you're walking along in a hurry and you accidentally dump a wheelbarrow full of bricks, and now you got to pick them all up and you got to go through that. Well, in the foundations and in Creativity 202, both of those things are part of the course. No, I don't want you to try that this week unless you get through all this stuff right away and you can get that done, then knock yourself out. But those are the next 2. Those are the 2 most important, I think, psychology exercises that we do in the foundations course. And the reason they're going to be helpful is that the house of trading is really a way that after you've gone through the SWOT analysis and you figured out what your 5 categories of strategies are, the house of trading is kind of a picture of your analogy or your metaphor of how you're going to organize it. Like, my house of trading looks like Manchester United Soccer Club and the way they organize to be successful in the world. I also have one that looks like a martial arts dojo for warriors preparing for battle. Those 2 analogies are really powerful to me. Those are stories that really resonate with me and make it easy for me to figure out how to blend my 5 different categories of strategies. That picture, that top level image and some text, turns out to be how you plant your flag. I said, this is what I'm going to do, and this is how I'm going to proceed going forward. So there's going to be some analogy, some story that works for you that explains how you see trading as a profession, as a life skill. Like, I would also say the 20 mule team, that's how I look at trading also, is I got 20 mules helping me pull 20 tons of borax that we mined in Death Valley, and that we're crossing Death Valley gonna go over the Rocky Mountains and then pull it 2,000 miles to Kansas City, where we're gonna get on a train and take it to Boston in order to provide chemicals for industrial cleaning processes. Well, this is a non-trivial effort. How do you successfully do that? Would you invest on a guy who says that was it? What kind of business plan does this guy have that allows him to believe he can reliably cross the Great Plains, over the mountains, across the desert, mine borax, take it all the way back to Boston, and then sell it at a profit? How does he do that? That has a certain mindset. Well, the mindset of the mule skinner, of the guy who can actually do that with confidence, is the same kind of confidence I aim to cultivate as a master craftsman in my profession of trading. So when I talk about the house of trading, what does your picture look like? What is that mental go-to image that in times of crisis gives you the fortitude and faith that you can do this stuff? You need to work on that. What is that thing that gives you the strength? What is it that you're trading for? Is it your children and grandchildren and family and the people? Whatever it is that gives you the source of strength and your trading plan is what I mean by what is your house of trading? The second one, the wheelbarrow, is a psychological exercise which says along the way, accidents are going to happen and you need to keep going. And the wheelbarrow exercise is a visualization of how to create grit and determination when things go wrong, because they will. So those are the things I would like to get you started on. I'd like you to anticipate coming to next Monday's session ready to do this. And what I'm happy to do with you between now and Monday is if you want to rehearse that with me, I'm happy to listen. But I think you can figure that out. But I'm happy to listen. And if you know each other already, you might be thinking about maybe somebody resonates with you already, or maybe you have somebody else in mind from the foundations course or the Kata 2 challenge that you would like to be as your accountability partner for the long haul. Start figuring out who that person is. You will benefit from doing that. So that's everything that I wanted to say for today. Just want to make sure that you can all access this course. Now, Jonathan, do you see this course now in your lineup?
Yes, yes,
Oh,
I've got
okay.
it. I was on the wrong.
In a different
wrong
part of the
area,
world.
so,
It's not
yeah.
like I haven't given you too many things to work on. I mean, that's part of the plan. And then if you go to these, if you go to this one, each one of these is a lesson in that module. So when you hit mine, like if you ran out of things to study, every one of those things that's highlighted is a separate video. So like if you need a refresher on some stuff, then I try to put some of the best things in there that you can refer to find easy. But then you can see Jim Carroll's stuff along with the Q&A and his files. Same with Jeff and Bill. So every one of those things is in your coaching packet, if you will. And then what I will do is later tonight, I'll go to this one, the coaching session, and then I will upload tonight's video into that area, and then we'll get that done. So I have us at 8:34. So I just want to know, are there any burning questions for you between now and next Monday, or in the next 24 hours? I just digest it. If you need some help to getting started, just drop me a line or give me a call. We'll get things going, and I'll answer questions as we go. It'll always be informal. I always want you to ask first and then wonder later. So don't worry about reaching out. Email is the best way to get a hold of me, or catch me in the night, one of the night in the podcast, and just bend my ear or something, and we'll get things going. So that's everything I wanted to say. George, anything? We okay?
We're good?
Jonathan?
No, I think I'm good.
Okay. Jeff, we okay?
Very good.
Juan Carlos, we all right?
I'm good. I'm just trying to get to the course. I have only the book club on my,
Okay, let me, I will add that to you instantly.
Hmm?
I think it should be in the same folder. But when you call up the book club, you should also be able to see that one. Have you taken any other courses with me from Brazuku, the OWL group?
not on here. It was
It was that you were under the old style with like the base camp, right?
Basecamp, yeah, and
Now,
Patreon.
did you take foundations?
I did, but it was in Basecamp and in the
Yeah.
main Tortoise
Yeah,
website.
that thing is, I have moved, I have transitioned away from base camp to the OWL group. So I'm going to add the foundations course from the OWL group into
Mhm.
your folder.
Thank you.
And so I'm still in the process of transferring some of the old legacy courses to the new style here with the OWL group. So I will add that one for you. Okay. I'll do that shortly. And then Satya,
Yeah, all good.
okay. Then that's everything I wanted to cover. Juan Carlos, that should be there in like half a second. And you should be able to see foundations there. Okay.
Perfect. Thank you.
You guys take good care and I shall see you soon.
Bye.
You.
Right.